Hello, everybody. My name is Jarek Bucholc. I'm the founder of Canada Real Estate Investors Club, Street Smart Real Estate Investing, and Jarek Bucholc group of companies, and many other companies I don't want to mention. And today we have a Claire Drage. We are having a special program, Street Smart Real Estate Investing with Claire Drage. Claire, what is it about? Just give me an idea to all the attendees, and then we will switch to your PowerPoint presentation, right? So.
Absolutely. So first of all, obviously, thank you so much, Jarek and Street Smart, for inviting me today. So we're going to talk about buying rentals and really picking the right market. How do you figure out which city, which area, which part of town, which province? You know, how do you really find the right market based on your strategy?
Okay, so let's switch it to your PowerPoint presentation and then rock and roll, right?
Fabulous. Okay, I'm just going to show my screen. We'll do this one. And I'll just wait to say, whoa, I think we're ready to rock and roll. So
we are ready.
We're ready. Awesome. So buying rentals, picking the right market. We're going to go through a lot of different strategies in order to find out which is the best area for you to purchase. Sometimes it's natural for real estate investors to follow where other real estate investors are going. There's some strategies we can put into place to be ahead of that market trend. Too often as a mortgage broker, I see real estate investors saturate one specific market because it's hot right now. And before you know it, that market is so saturated that investors are competing with each other. So sometimes it's about doing a bit more research beforehand to look at potential future trends and even keep an eye on those markets. So let's go through some different options. So first of all, a disclaimer. Now, of course, we cannot possibly cover every scenario, every market, every investor, every situation is different. So of course, I'm going to make some general statements and would really ask that you have an individual consultation with key members of your power team. Also, I'm possibly going to give you a perspective from a mortgage broker standpoint. It's really important to understand I'm not a real estate agent, but I am a real estate investor. So I really do understand a lot of the concepts of acquisition, but also exit strategies as well. So let's talk about your due diligence process. The one thing I always like to reiterate is that mistakes happen. More and more mistakes will happen the bigger the emotional attachment is to the investment. This often happens when you're looking to buy somewhere local. You might turn around and say, you know what, my first investment property, I want it to be in my neighborhood. Well, that's awesome. You've got great neighborhood knowledge. But the challenge could be you're emotionally attached to the neighborhood, the area. You might not want to drive by your rental property every morning on your way to work or dropping the children off at school and notice things like they haven't cut the grass, they haven't put the recycle bins inside. Why is there a garbage can at the end of the driveway? Why is there 4 cars in the driveway, but I only have 2 tenants? So sometimes it's about not getting emotionally attached. So I always like to reiterate the part of your due diligence process is treat this like a business. This truly is like you purchasing a business. Some people spend more time picking out a new pair of shoes than they will actually their real estate. And it's about doing all of that due diligence. Up on the screen, you'll notice a whole sort of circle of due diligence process. It starts, of course, with understanding why you want to buy real estate, analyzing the buy, your pre-offer due diligence, making your offer and negotiating, closing and ownership, and then, of course, your exit strategy. All of these should occur with every single acquisition. So what are we going to cover today? We're going to cover analyzing the buy. Really wanting to focus on what steps do you need to take to analyze the purchase. Now, let's talk about the wealth building blocks and also what are the key elements to always stay focused on. Well, the first one is going to be, why do you want to buy real estate? That's always a great question. A lot of people go, it's because I want to get wealthy, because it's a smart investment. But is that really the why? I think we need to drill down a bit further to the real reason. Of course, then you want to buy it, and then your exit strategy is going to create wealth in real estate. So let's talk about the why. So why do you want to buy real estate? Now, a lot of you might be thinking, Claire, this is pretty basic. We all know that this is important stuff. But I'm constantly surprised at how the reason why you want to buy real estate can sometimes be forgotten in all of the frenzy of the due diligence and the excitement and the apprehension, that the reason why you want to buy real estate sometimes gets muddied or forgotten. So let's briefly go through the 3 wealth building blocks, the reasons why you might be deciding to purchase real estate. What I'd recommend you do as you're watching this is maybe grab a pen and paper and consider writing down a few reasons of your why. So quick cash, what does that refer to? So quick cash is, of course, building capital. Maybe you have empty pockets. You don't have a large, access to cash or down payment. So what strategies could you put into place to create capital? So, of course, we have our standard scenarios. Maybe doing some flips, buy, renovate, sell, make $20,000, $30,000, $40,000, $50,000. Maybe doing rent to own, where the quick cash can come with your initial option consideration. Then, of course, the bonus is the extra cash flow. Maybe wholesaling, selling off a deal to a fellow investor that maybe doesn't have the luxury of time that you do to source the right opportunities. Assigning a purchase agreement or a specific deal to someone else for a fee. And of course, joint venture partnerships. So that's kind of quick cash, build capital. So if your whole idea, your why for buying real estate is because you need quick cash, therefore, if you see a property that has great cash flow, you're not currently in that why market. Now, what I mean by this is that no matter which of the wealth buckets you're in, the fact is you're in typically one at a time, and then you add more and more as you go on. So if you really need quick capital, you need, 50 grand to build up in your bank account, then this is going to be the wealth block you'll be focused on. Now, cash flow, of course, that's all about creating a monthly income. So creating that excess cash flow. So, of course, that can come from rental properties, anything from single family, student rentals, rooming houses, rent to own, multifamily buildings, and, of course, commercial. So the bottom line with cash flow is obviously your income is going to exceed your expenses on a monthly basis for the property or properties you want to acquire. This might be your bucket because you want to quit your job or retire 20 years earlier than expected, or grow your family, have children, and maybe your partner or yourself don't go back to work when your family expands. Whatever the reason you need the money, the bottom line is your why for the buy is going to be cash flow. So as we seek the right market, the right area of town, we want to make sure that cash flow is there. So is that one of your whys? Now finally, this is one of my favorite ones, portfolio income. Probably the easiest of the wealth buckets from a time perspective, and usually typically something people work up to. So this would be where simply your money makes money. So you're going to be the banker. Maybe you're going to be borrowing against your existing real estate portfolio and loaning it out to other borrowers, maybe even fellow investors, and just sitting back and relaxing and having your money making money. Also potentially using self-directed RSPs, LIRA, or a TFSA to further loan out, be the bank for a change, and get a superior return on your investment. So I want to just reiterate the why. So is it quick cash, cash flow, or portfolio income? So the key thing is remembering that and keeping that top of mind. If I want a cash flowing property because I want to quit my job 3 years from now. So my why might be cash flow, but how much? If in order for me to quit my job, I need to have $4,000 a month of positive cash flow, then that's the focus. I then want to stay laser focused on finding the right market that's going to meet that need as soon as possible. So this is your why, so remember your why. So I wanted to talk a bit more about the due diligence process. So typically there's kind of 3 phases of the actual buy process. So the first phase is pre-offer. This is about you deciding what's right for you, picking the right location, picking the right property, ensuring it aligns with your strategy. Now, typically, a real estate investor will spend 60% of their time in this area. It's also typically in this phase when deals, a majority of deals or offers you've put in will fall apart. And most of that is because of your due diligence process as you drill down to all the finite numbers doesn't align with your why, the reason you're buying real estate. Phase 2, of course, is the offer. It's put in, it's accepted, yay, you're meeting all the conditions. Again, making sure nothing's changed. Does this particular property still align with my strategy? And typically that's about 30% of your time. Now closing is easy, simply closing the deal. Again, making sure it aligns with your strategy. It typically will take about 10% of your time. What we want to cover is, the location. How do you pick the right location? So over the next few slides, I'm going to talk about a number of economic data, a number of great resources to use to collect data. For some of you, it will be like an economics dream of information. For others, it might be too much information. I'm not saying you need to understand everything about the demographics in your area and the population and the construction starts and the average age and how many renters and what's their average income. But it's all data that's going to help you target down into the right market, even down to the right neighborhood. Now, once I've gone through a number of these, I'm also going to test drive a strategy. So if anyone is, if anyone is looking at a specific area, I'm going to randomly pick one, and we're going to walk through the due diligence processes to find a target market for the strategy that I have in mind. So, first of all, let's look at provincial economic data and growth. So you might well already have decided, okay, I'm going to purchase in Canada. But which province is the right one for you to purchase in? Now, there is a huge amount of data that's available. Our goal, of course, when we're picking any specific province is to ensure that, of course, it's going in the right direction. You don't want to start investing in a province when there's huge migration out. So no one's coming in, they're all going east or west or north or south. You've got people leaving the area. You really want to look at the provincial economic data to make sure the province you're selecting has the right characteristics and the right elements which look like things are going the right way. Now I'm going to go through a number of websites and some data that I use a lot to do my due diligence. Now the key thing is that, of course, none of this data that you can find on websites is going to necessarily give you an idea of surprises, for things like, whether it's the political arena, whether it's our country or those countries we do a lot of business with, whether it is, global, weather conditions, are things impacting the global and Canadian economic, gross domestic product, the consumer price index. Basically are rates going up so people aren't spending? How does that impact? what does each province play in the big picture of Canada's economy, and where is that data and growth, where is that growth occurring in each economy, in each province. So let's look at some great resources. So the first one that we're going to look at is, we'll look at Alberta. So the each province has like a finance ministry. And the finance ministry, for example, of Alberta, has some great, amazing data. And then we're going to pop in and look at RBC's economic report as of September this year. So I have deliberately picked Alberta, and we're going to open up Alberta's, let me just move this over. Perfect, so I think you can see that okay. So here we have from the government of Alberta, so a great resource. Now this is the Alberta and census population based on the 2017 census with predictions of where the population is going to go right up to 2041. So obviously what we want to look at is good data. We want to look at, are things projected to go in the right direction? Now, of course, we can't possibly necessarily predict things like, you know, is the pipeline going in or is it not? You know, what are the big economic drivers? You know, are they going to be adjusted based on political, you know, agendas or, you know, things that occur that aren't necessarily in our control? So let's just have a quick look at a few pages. Obviously, for timing, we're not going to go through everything in here, but the whole point is things like the population of Alberta. Is it going in the right direction, and where is it projected to go? So this is going to give us a true idea of where we think the population is going to go. Obviously, we don't want it to be flat. We want it to be going upwards. The bigger migration, the bigger population growth, then of course the more people, somewhat more people that need a home to live in. Now the key thing, of course, is going to be, one thing that's going to be really important is, what about the ages of those that are going to be in the province? So there is a lot of information in this, but I really want to jump to things like population growth up to the year 2041 based on males and females, and also on their ages. So where is going to be the biggest growth with a certain demographic? Again, all of this is just about looking at the population growth in the province you're thinking of investing in. I want to jump to a page here which is going to really show us, as I scroll down, this one. So this is population growth between the ages of 15 and 64 predicted. And of course what it's going to do here is give us, you know, I look at the 25 to 54 year range. These are potentially my tenants, my tenant buyers. You know, what is that population growth? Is it going up or down? So right now it's kind of telling me that it's going to grow steady, but it's not really a massive incline. So I might want to be cautious based on the demographic of my potential tenants. Again, I can go down looking at growth per age. So there's definitely going to be a bigger spike in those age 65 or older. So it's kind of telling me, probably like every province in Canada, that there's going to be an aging population. Now, we already probably know that, but what is that going to do for my real estate investing? Well, maybe I should be investing in seniors' homes or, you know, assisted living. CMHC has a great program for 15% down default insured mortgages on assisted living or, you know, living for, you know, a specific age. Any of those facilities, which is awesome. There's programs out there and there's opportunity for us as investors. So of course, the next thing I want to do is, here is the expected, I'm going to zoom into this one because I think this graph to me is very appealing. So of course I've picked Alberta. So what you'll notice there is this is the percentage of change of the population between the age of 15 and 64, between now and what, 20 years, 25 years from now. But it's based on town. So it really is giving me an idea of where the trend is of population growth. So look at Red Deer, look at Edmonton. So they're going to expect a 40% increase in population by 2041. Now, I know as real estate investors, we might think, well, what do I care about 25 years from now? Well, are you in it for the short term or the long term? If your exit strategy is to retire in 20 years and liquidate your portfolio, then you'd be happy to see that kind of growth. There's going to be a demand for housing. There's probably going to be construction starts. You know, do I want to invest in, you know, Rocky Mountain House, for example, or, you know, Settler or Hannah, you know, when they're expecting a negative growth in population. So the fact is, I want to mean Lethbridge. Lethbridge is going to grow by 30%. It could be an area where people go, Lethbridge, but look at the data. Again, you're not going to take just one of these graphs and make a decision. You're just going to layer these onto your decision-making process, potentially to validate what you might already know, but similarly look at markets that not everyone is going to. Do you want to be a sheep and just like, bah, and go where every other investor is going? I'd say no. You want to be ahead of them. I want to be the sheepdog that already knows where we want to take the sheep to, because that's the market I want to focus on. So that's just one example. Let's go back to our next one. So again, we're just on provincial and economic data. This one is with RBC. So RBC actually does one of these a month. So this is actually really cool information. What I like about this is the annual change, the average annual change in a number of key factors per province. So again, I'm going to zoom in so you can see the first graph a bit clearer. So we're focused on Alberta as an example. So it looks at the gross domestic product, and obviously you can see in 2015, 2016, 17 and 18, giving us an idea it's going to go from negative to positive. So that's a great forecast. But what about employment? So employment, it's kind of flat-ish. What about unemployment? So you might be wondering, well, if employment's flat but unemployment's going up, then, you know, that can't be right. Well, it can be migration. It could be the aging population. You know, if you're 62 and you've just been let go, getting a new job can sometimes be difficult. So it will take that into consideration. Now, what about housing starts? You know, when I see these kind of numbers, I kind of go, holy smokes, that's a 27% increase in housing starts. Retail sales going up. And again, consumer price index. So what's the cost of goods? Again, sometimes it's just validating the information I already know. Now, of course, I can compare per province, but this is great data from a individual monthly standpoint. So you've got like the provincial one that's going to give you, the government one that's going to give you like based on the census, and then this one is going to give you monthly stats based on recent data. So a great resource. Again, you know, you don't have to be an economics major, but it might just well confirm the markets that you're looking at. So what do you want to avoid? Well, anything that's going down. I mean, that's the bottom line. If everyone's moving out of Alberta, then it might not necessarily be a good province to be in right now. So, you know, but then again, people are coming in. You know, sometimes it's about listening, reading the papers, looking at this data, and having the statistics tell you. Not necessarily the realtor trying to sell you a home in a specific neighborhood, in a specific town, in a specific province, that might not see the growth that you want to see based on your why. So let's look at local economic growth. So local economic data and growth. This is going to be really important. So we've said, okay, province. We love Alberta. So now let's look at towns and areas in Alberta, for example. So of course the goal is to make sure that you're investing in a town that's growing or about to grow. If it's already grown, then you may be a bit late, you know, joining the investment train. So let's really look at, you know, a couple of factors. Some things that are really obvious to consider would be things like investing in single industry towns. if, when there's only one or two major employers in a town, then sometimes, of course, if there's something that happens with that employer, then that could significantly impact, of course, the whole economic strength of that local economy. So single industry towns, the lenders don't like them, and also they can become very volatile. So, for example, Windsor in Ontario, 10, 15 years ago, because the auto industry went and, everything fell apart. Currently, Windsor is the largest growing town in Ontario. It's got huge investment and huge growth. So economies can turn from a single industry town into multiple, but what that takes is infrastructure growth from a provincial and a municipal standpoint. If the city doesn't invest in bringing in attracting other employers, then of course that can have a negative impact. Look at Alberta, for example. When I moved to Canada in '98, I moved to Calgary. So I was in Alberta for a number of years. So, it was typically oil town, but now it's got such a much bigger diversified pool of employers, technology, and of course there's still the farming. Like, there's other employers and head offices in Alberta that you might not have seen 20 or 30 years ago. So again, RBC has some great economic data. Let's have a quick look at these city trends. So here we've got, I'm going to zoom in again on this. So this is a scorecard. So this is basically, again, a monthly ranking scorecard based on city growth. Again, it's looking at the adult population, the rankings. We rank, a city from 1 to 30. So, of course, 1 is like, and 30 is like amazing. So what obviously you're looking for is to maybe look at the town you were thinking. So maybe we were looking for Calgary. And I look at Calgary and I've got the consumer price index, well, it's 5. Okay, that's pretty low. I've got the adult population ranks at 10 out of all of the cities listed here. I'm looking for the high numbers. So except under the jobless column, jobless is not good. So the jobless rate is the one you don't want to see a high number. So of course, right now it's 26 out of, 27 cities listed here. So it's pretty poor on the jobless rate, which is not good. But then we scroll over to non-residential building permits. So there's a lot of commercial building permits being issued. So could that be future opportunity for investment and commercial properties? So again, it's just a Canadian city trend. I mentioned earlier Windsor. Where's Windsor on here? Have we got Windsor on here? Windsor. So look at Windsor. It ranks pretty high on the numbers. Adult population growth is going up to 18. Jobs ranking really high. So there's lots of jobs. Housing starts high. Residential building permits high. So again, there is growth and infrastructure in those two cities as an example. So all we're saying is really focus on what is the city you have maybe narrowed down. What's the infrastructure growth? Are there things like, is the sea train expanding? Is there, are there initiatives being done by the local municipality to expand and attract more employment and more people into the area? So again, you want to look at that local economic data. What to avoid? Anything that's negative. So I think that's pretty straightforward. New construction data. So, how many new builds are occurring? So, the goal, this one's a tough one because there's just as big an argument that the more building permits that are issued, the less demand there will be for, because there'll be more supply than demand. It can also be the opposite. They're having to build because there is more demand than current supply. But again, it's kind of finding that scale. You've got supply and you've got demand. So, if there's lots of housing permits, construction permits issued to deal with the supply, they're going to increase the supply based on the demand. You don't want to kind of see this big shift. At some point, if there's lots of construction starts and housing permits issued, there's lots of construction, suddenly that demand and that supply is level, so the market's flat. Ideally, of course, like any supply and demand, as an investor, it will depend where are you at. So if you're looking to buy, you want to be buying in a buyer's market where you've got motivated sellers. But if you're wanting to sell, you want to sell in a seller's market. If you want to hold, what market do you want to be in? If you want to hold, you really want to look at, okay, what is your investment strategy? If it's cash flow, so you want to make sure you're holding in a market with low vacancy rate and demand for rental units. So again, looking at that construction data can just give you an idea of expected growth. So for example, here's construction data for a neighborhood in Calgary, and it's based on the ranges for the years in which properties in the area were built. So this is actually going to tell me, for example, that in this case, 83, so over half the properties in this neighborhood were built between 91 and 95. So you might say, well, sure, Claire, but how important is that? Well, what do you think? If my strategy is quick cash, do I want to look for neighborhoods that have older homes? So homes where the bigger portion of homes were maybe the 1970s and 80s, where maybe I can do renovations. So maybe I'm going to look at those homes that are built between 1986 and 1990, look at neighborhoods where there's a bigger chunk of those, because are they the ones that have an opportunity to find motivated sellers in older homes that are outdated, that probably just need new kitchens, new flooring, neutral colors, take down that flowery wallpaper in the bathrooms, and those what do you call them, those panel things, that pieces of wallpaper you could put on all the walls that were the fashion back then, and put nice hardwood in and take the carpet out of the bathroom, and all those things that you could do to that property. If your acquisition strategy and your why is a flip, you want to look in areas where the homes were built maybe in the 80s or early 90s. So that would be your opportunity. Again, all it is looking at, why do I want to buy real estate? Quick cash. Okay, I want to look for construction data, not just on new starts, but also on what's the current average age of homes in the neighborhood I'm looking at. And of course, there's great information on Stats Canada. There's a link here, and I believe we'll be able to give you access to all of these links, so don't worry about that. So of course, with new construction, what's to avoid? Do you want more new construction or less? It will depend on your strategy. It's that supply and demand conundrum. You might find that there is a lot of demand for rental units, so therefore construction starts on multifamilies might be up. Eventually, when those construction starts are finished, that supply and demand is going to level off. Then there'll be another need, maybe for 3-bedroomed rentals for those expanding families. Population demographics. So of course, this is now getting down to, okay, well, what's the population being made up in my area? So we're going to go through this pretty quickly. So the age. So of course, you'll want to look at the average age of individuals in your town, because who are they? Let me give you an example. I had an investor that contacted me that wanted to build townhouses, wanted to build 24 two-story townhouses. They would actually be stacked. So technically 4 stories, but they're stacked sort of back to back from each other. So if you're looking at them this way, they're kind of one here and then one there and then one here and then one there. So obviously townhouses, 2-story, single attached garage. So awesome. So we looked at the population demographics in the area where we found this lot of land. When we looked at the population, the average age, like more than half the population, was over 60. So we really had to look at, okay, you're going to build 2-story stacked townhouses with an aging population. You're actually better off building a 24-unit, multi-family building instead on single floors with an elevator, with wider bathrooms for wheelchairs or walkers and Zimmer frames, where people can live, because the average age is much older, they're not, families with 2.5 children on average, where the larger population base is in their 30s to 50s. This was an aging population area. That's why the land was so cheap. So it totally changes what you're going to build based on the population demographics. Marital status. So, if the larger population is married, then obviously having 2 or 3 bedrooms is going to be, more suitable. If there's a lot of single families, then of course, bachelor apartments. And what is the demographic of the area? Is it hip and trendy? And so maybe it's 1 beds. Is it, lots of families? Is parks? There's a school nearby, or plans to build a school. So therefore, the type of properties you might want to invest in to see appreciation is going to be based on the population demographics. Again, StatsCan has got some amazing information. So for example, here is the housing starts, but I can go right down to each individual area and right down to the population base. So using this is a great resource. So tenant demographics. So this is one of my favorites. So if I want to buy multifamily or rent to own, I want to get cash flow, I really want to look at, well, who are my tenants? Am I going to be renting to those that are on ODP? Are they going to be low-income earners, middle-income earners? You don't want to renovate a multifamily building to such a high standard that's above the demographic of your potential tenants. You don't want to over-renovate, which doesn't mean you want to be a slumlord, but you only want to renovate to a point where it's going to attract the right tenants. But the right tenants might not be attracted to the neighborhood based on the demographics. So those would be things like, age, education, the languages that they speak, the household income. So back in the day, we used to have to go through like a gazillion places to get that information. Now, the fortunate thing is Realtor.ca can provide all of this. So I've taken the liberty of finding a current listing, and we're going to go straight to the potential tenant demographic information. So what you'll notice that when we're looking at this, cute little, townhouse in Riverbend, I picked Riverbend because that's where I used to live. We've got the information on the details of the property here. So awesome. I've got, a couple of bedrooms. Was it 3 bed, 2 bath with a maintenance fee? Awesome. But here we've got the statistics. So this is going to give me all the demographics that I'm looking for specific to this neighborhood. So what you'll notice here is I've got a median age of 46. So, okay, it's probably going to be families. Household average size, 2.47. Average household income, 141,370. So if I'm going to do a rent to own in this neighborhood, if I'm going to do a regular single family rental, or maybe convert it, put a legal suite downstairs and it's 2 units, it's giving me an idea of the average demographic of my potential tenant. So if I do want to do any rehab to the building, to the property, I want to target it to the demographic that's already attracted to that area. Again, a lot of this information your realtor should provide for you on your power team, but it's also a great way of you narrowing down, even right down to a neighborhood. So it also says that there's 37% in the area that are not in the labor force. Now, of course, those could be, homemakers, so stay-at-home mums and dads. There's 46% of households without children. Maybe you're a landlord that doesn't want to rent to families with children. I'm not sure you can legally do that, but you never know. The key thing is this information is really going to help. You've got population by age group, so you can get an idea of how big is the, how many, what we've got, 55 to 64-year-olds are like, just under a quarter. What's the population growth? So, what is it intended to be? So I look at this area in Riverbend and go, holy smokes, it's kind of met its peak on population growth. So it's probably telling us that it's going to level out. Now, if anyone knows Riverbend, there's no more room to build anything. So naturally, don't take this information verbatim. Don't think, oh, it's going the wrong way, so that means, everyone's going to be moving out. No, it just means that they're not building anymore. So therefore, if there's great schools in that area, there's no more new construction for new people to come in. So buying existing properties, it already means the density is there. So therefore, that can be good or bad. Education. So it's going to give you an idea of how educated the population is. What's their marital status? So here, of course, we see that more than half are married, so typically families. So already I'm thinking this could be a good area for rent to own. Families, there's some great schools in the area, but there's no more construction, there's no more new build, so people could only move into what's already there. Languages. So obviously a large chunk are English. Now, why is this important? It's not important so you can racially profile. What is important is your potential marketing in that area. So, obviously a large chunk is English. What's the next population? Oh, other languages. So let's pick this one. German, smaller groups of different nationalities. But as I change neighborhoods, this might change. If I pick an area that has a high Spanish population, for example, I might want to make sure I'm working with a Spanish-speaking realtor, because it's a likelihood that my tenants or my property management or my potential tenant buyers or buyers might well be Spanish-speaking. It would be a benefit. Household income, we've talked about. Children at home. Here is the one that I love. Okay, so this is huge. So there is a massive chunk of homes in the Riverbend, in Calgary in the southeast, that are owned. So a majority of the properties are owned. Now, what does that tell us? Well, that's going to tell me that there's not many renters in the area. So there's definitely could be demand for people to have properties to rent. So it could be a great rent to own. But also the key thing here is going to be that, pride of ownership. The homes are probably well looked after because most of them are owned and not rented. If I saw a bigger portion of rented, there may be some negative impacts in certain neighborhoods where tenants don't necessarily look after the property. Construction date, we talked about this earlier. So there's a big chunk of these properties that were built in 91 to 2000, like a huge chunk. So is this a great area for potentially buy, rehab, refinance and hold? Is it a buy, rehab and flip and sell? So again, a larger chunk in this area is built in the early 90s, so potentially outdated, an opportunity. And of course, occupations. So how many of them are in the sciences, are sales and service, are business and finance? So already I can see probably predominantly white collar demographic, aren't necessarily as many that are in the trades. So there's only a very small portion that are in trades, so laborers and trades. So some of this you might be thinking, yeah, but Claire, I live in Riverbend, I know this. But are you always going to be buying in your backyard? As you get confident enough to go out into different areas that you're not familiar with, at least you'll be armed with some tools to find the right area. Okay, so moving on, I'm very conscious of time because I want to make sure we have a chance to do a run through. Okay, so employment rates. Of course, the goal is to make sure you have as many people employed or employable in the area. You do not want to see large unemployment, because those that are unemployed don't pay rent. And that's going to be really important. Vacancy rates. So of course the goal is to have low vacancy. You don't want to have high vacancy rates where you potentially have empty units. Now there's a great portal called the cmhc.ca HMI portal. That's going to give you a lot of information with regards to I'm just going to move out of that because for some reason it's not working. I'm going to go to the portal here. Where was I? So the CMHC portal is awesome. I love it. So CMHC portal basically will give you a lot of information about housing starts, but also the primary rental market, the seniors rental market, population and household statistics, housing stock, and the core housing need. So this is huge. So this is kind of like, you know, is there adequate housing? What are the options? So I'm just going to squish these down here. So you'll notice right now I have the full outlook of Canada. So I can now go to, okay, I'm going to pick Alberta. So now I'm down to Alberta. Okay, awesome. Let's pick Lethbridge again. Lethbridge. So awesome. In Lethbridge, I can even pick an area. So let's pick Colhurst. Why not? So now on the left-hand side, it's giving me the key information. Now, unfortunately, typical, I pick one where it doesn't have anything on the rental market, which could mean it's a predominantly an owner's market. Let me just go back to just Lethbridge. There we go. So at least it's giving me an idea of the vacancy rate. So it's kind of going up slightly. Availability of apartments, the average rent for a 2-bed, and the median rent for a 2-bed. Again, it's going to really break down some of that information for me and really give me a strong idea of that population base and vacancy rates. These vacancy rates on this portal is what the lenders will use, especially if you're looking to buy multifamily. This is where the lenders will go to decide the vacancy rate. Okay, positive cash flow. So of course the important thing is, especially when it comes to monthly cash flow, is ensuring it is positive. So of course the goal is to be able to obtain the highest possible market rent. Figuring out how much the market can tolerate based on the rent you're going to charge. So there's a great website that I use a lot called PadMapper. So PadMapper is not working on this. This is so funny. I'm just going to reload. Hold on a second. Bear with me. Let me just shut down some of these. So PadMapper, you know Realtor, what Realtor is to purchases, PadMapper is to rentals. So why don't we pick Calgary again? So I go Calgary, Alberta, and basically it gives me a map. These are all the current rentals that are available. So over on the right-hand side, I'm going to, well, let's do a dry run. Let's do an example. Let's assume my strategy is, my why is cash flow. And I'm a bit nervous about buying multifamily, managing lots of tenants, but I really like rent to own. So I like rent to own because it's a win-win, it's a short exit strategy, I'll get good quality tenants, so, you know, I'll have better, it will make me feel more comfortable as a landlord. So awesome, I'm going to do rent to own. So therefore, the first thing I'd want to do if I'm going to do rent to own is look at what is market rents. Because I'm going to charge my tenant buyers market rent. And then, of course, they're going to pay extra in order to go towards their down payment when they buy my property. So really the first thing I want to do is go, okay, well, what are market rents on a single family, 3-bed, 2-bath? So PadMapper will give us current listings. So on the right-hand side, what I'm going to do is I want to look for long-term rentals only. Short-term is going to give you like Airbnb. You don't want those. So long-term only. I would like 3 beds, and I can add more filters. So here I can put in more filters, and I might say, okay, I only want houses. I want to make sure they have at least 2 bathrooms, and that's it. So now what happens is now I've narrowed down availability. So I'm just going to pick the southeast just because I'm used to it. It's where I used to live and I'm familiar with it. So now what I can do is start to zoom in to an area that, where are we? Let's go down here a bit more. I'm going to zoom into a specific area. So, you know, I was talking about Riverbend earlier, but down here in Quarry Park, I'm going to click on here, and here is, oh, perfect. This is a great example. So this is already telling me that this is the only 3-bed, 2-bath available to rent in the southeast of Calgary. So supply and demand. So the one thing we need to really consider, especially with rent to own, is that, you know, when you have a family, husband, wife, a couple of children, when you go to pick from the rental market, the picking has been pretty slim, as opposed to picking from the purchase market. So the beauty of rent to own is your tenant buyers do get to pick from the purchase market. But you need to make sure is if you were to purchase this property, right now we know that a 3-bed, 2-bath would rent for $21.95 in that area. So immediately I know market rents, $21.95. So make a note of that because this is something that we want to do as we do our dry run. So remember, I want cash flow, I want quick cash. I want to do rent to owns. 3-bed, 2-bath home, single family, because I don't like condos. That's kind of what I want to focus on. So $21.95 is my market rent. Awesome. So it's going to give me information on the property. I can scroll through the pictures. Oh, it looks beautiful. Beautiful property. Now, you could be a smart investor and be targeting this owner as a motivated seller if they can't find a tenant. So it could be an opportunity to knock on that door as well. But obviously I want to take some information here. It was only listed a minute ago, so boy, this is fresh off the press. So I know here I have a beautiful, amazing, you know, 3-bed, 2-bath home in Douglas Glen, renting for $21.95. So now what do? Now what do I do? So I know that's what the rent's going to be. So now I want to see is, okay, how much is it going to cost me to buy a property in that area? So I can go to realtor.ca, but I personally like a website called, I think it's .ca. Yes, I personally like lilypad.ca. It uses everything from realtor.ca, but I just find it much more intuitive. So I'm going to pick Calgary, Alberta is where I want to buy. And now I'm going to start to put in my filters. I want to buy a house, and I want 3-bed. And so what it's going to do is actually start to show me potential properties. So here is one, which is a 3-bed, 2-bath in Mackenzie. So it's not quite in my area. So what I might want to do is expand my search to Douglas Glen and see what comes up. So now it's going to give me all of those properties in the southeast that are 3-bed, and I want just houses. So remember that one that we saw that was for rent for $21.95? So now I'm looking to just see, okay, am I going to find that type size property? So we've got one here on Riverside for $458, 3-bed, 3-bath. Okay, let's scroll down. That one's a bit small. Don't look as nice as the one that we were looking at before. Okay, that one's not bad. That's on Mackenzie. Again, I'm trying to find, oh, look, here we are. Now, this one's slightly bigger. It's a 3-bed, 4-bath for $5.99. Or here I've got one that's a 3-bed, 3-bath for $5.49. So it's obvious that somewhere between $4.70 and 550 is going to be the purchase price. So now what do? I know that if I buy this home for, you know, this one for 550, it's going to rent for $21.95. Is that going to cash flow for my investment strategy? Is that going to cover my 80% loan to value mortgage? Because what I want to do is I want to kind of go, okay, if I end up just having to put a tenant in, will $21.95 cash flow a rental, a purchase of this type? Already I can tell you no. We probably need to get somewhere around $450. So here are similar listings. This is why I like LilyPad. I picked this home, and down here it's going to show me similar listings until I find one that's maybe in a better price bracket. They're all in the 500s or 600s. So already I'm thinking, you know what? Southeast, that Douglas Glen area, might well be out of the price bracket for my rent-to-own strategy. But what if it wasn't? What if I could buy this home for $450? Doing the cash flow, it's going to positively cash flow. So therefore, my rent-to-own strategy in the southeast of Calgary, as long as I stick with purchase prices of around $450, is positive. So I have test-driven my strategy. I've got rent-to-own. I've found an area. I know the purchase price of the market rents is going to create that positive cash flow. Now what I want to do is do my target marketing to that area. So I want to focus on mortgage brokers that are in that area, realtors that are in that area, put my Kijiji ads focused on that area, connect with tied landlords in that area. Sometimes we spray and pray. I want to do rent to own in Edmonton. Well, I don't know, last time I looked, Edmonton was pretty big. And, you know, do you really want to work with a realtor that's closer to Leduc when your rent-to-own strategy only works in the northwest of Edmonton or up in St. Albert or Fort Saskatchewan? So the fact is you want to be able to narrow down your target market so that you can then target your marketing to that area and those people that are within it. I could even look at this and kind of go, you know what, there weren't many rentals in Riverbend. There's 4 great schools within driving distance in a catchment area. I could do some marketing around the schools. I could, you know, do some flyer drops. You know, I want to target that market. You know, do you know anyone that wants to get in the area but can't find anywhere to rent? It's a perfect way to really adjust your marketing and get a bigger success rate, basically. Okay, so of course what's to avoid? Well, negative cash flow. Or when you do your cash flow analysis, it's just not aligning with your why. Remember, quick cash, cash flow, or you're being the banker, portfolio income. Rental increase potential. The goal, of course, is to have the opportunity to increase rent. So I know in Alberta right now, you have the ability to increase the rent. But for example, if you're buying in Ontario, you need to understand Ontario's Tenant Landlord Act and the fact that you can only increase the rent on current tenants based on the government's legislated percentage. So for example, 2.1% in 2016, I think it's 1.8% this year. So if your expenses are going to go up, like your property tax, the interest rates on your mortgage, future maintenance, but you can't increase the rent, then that maybe will impact your ongoing hold strategy. And of course, you want to avoid those that really limit you, those areas that limit you as a landlord to make those adjustments. So I have just gone through a number of different sort of ways to do a bit more digging into specific target markets. And the important thing is to test drive that strategy. The example I've just gone through is on rent to own. So I picked a neighborhood. I decided that that neighborhood had potential because there wasn't many rentals available, but a good catchment area based on population, size of family, and the schools and the infrastructure. I liked the population base, the average age, the average income, the fact that there was a lot of employed, they were white collar and not blue collar. Not that blue collar's bad, but it's a different demographic. The fact is I narrowed down a neighborhood. Now let's look at market rents. Now let's look at purchase prices to get that market rent. Does that create a positive cash flow and align with my strategy? And if it doesn't, okay, next. Let's move on to the next neighborhood. So I want to just for the next 3 or 4 minutes just focus on one of the tools that's available when you use the services of the right mortgage broker that might help you with some of this due diligence and really once you've found a property, ensuring that it meets your needs. So mortgage brokers can offer you a number of things, one of which is becoming even more and more popular across every province is what's called a per-view report. A per-view report is going to tell us the property owner's name, so who has the right to sell the property, the legal description, pictures of the property, square footage, and zoning. It's also going to help us determine the seller's motivation. So maybe you see a property that's listed for rent, could be a tired landlord. Maybe pulling a per-view on that address through your mortgage broker of choice could give you some ammunition to see how motivated that seller might be. Because the report's going to give you the ownership and sales history. So how much did the current owner pay for it? In this example, you can see that it was originally owned by Maria and Werner Kress. They owned the home in 1959, so the original property owners. But it was transferred to a representative back in 2014, and then it was transferred to Arlene. We actually know that Arlene inherited the home because both Maria and Albert passed away. So it's going to give us a lot of information about the sale price and the previous history. It's also going to give us an idea of the estimated value in the neighborhood, all taken from title transfer registration. It's going to give us an idea of the neighborhood profile. Is it going up or down? Sometimes just picking a random address in the target market you have found and then asking your broker of choice to pull a per-view on a number of properties in that area. Giving you the market trend can help you determine potential future value if it is a rent to own or if it's going in the right direction. It's also going to let you know how much debt is on the property. So, yep, we'll be able to tell if the current owners have any mortgages. Because if we know how much cash is in the property for the seller, it will determine whether we're going to be aggressive in our negotiating. Are we going to ask for a vendor take back? If it's fully leveraged or over-leveraged, we're not necessarily going to win in our negotiation. We might choose to decide to move on to the next property. It's also going to give us an idea of the equity. In this particular example, there are 2 mortgages registered on the property, so therefore potentially leveraged, may even have negative equity. We're also going to, of course, get neighborhood sales trends based on the neighborhood trend as well as the subject property in a graph format. And we're also going to get historical comparable sales when the last owners purchased and today. So this is a great way of getting non-partisan comparables. Being able to compare these with your real estate agent of choice on your power team to ensure that they have potentially picked or if they missed any of the potential comparables. It will also give you an aerial view and then an aerial picture of the 3 closest comparables. So the example I actually went through here is actually a property that I was looking to purchase. And this information gave me a lot of power at the negotiating table. Because let's face it, if you find the right target market, you do your due diligence, it aligns with your why. And then, of course, you want to supplement that, have that cherry on the top by getting money in the buy, finding motivated sellers to create even more wealth in your real estate strategy by having money in the buy. So we've gone through a number of things. We've really gone through some target demographics. I know a lot of it was economics, but it's key information to find the right market, giving you some great tools and websites to go to help to start to collect this data. Sometimes it can be used just to validate what you already know. Sometimes it can be used to look at trends. Don't wait until you read it in the paper. You want to be ahead of the news. You want to be ahead of, what are the top 10 cities for growth in Alberta or Saskatchewan or Manitoba, or ones to avoid. Just because 6 investors that you know are buying there doesn't necessarily mean it's right for you. Only you can decide what is right and what's your right market. And just having some tools to help make that decision yourself, complemented with the information available, of course, through street smart real estate investing, as well as your power team members. So I believe I've covered a lot of material this evening. Hopefully it hasn't been, or I've covered a lot of material. Hopefully it hasn't been too overwhelming. This is time for us to open it up to some questions.
Wow. How is it called, that report, and how you can get that report on a regular basis? That one, my question is direct right away.
The Purview. So the Purview report is only available by lenders and mortgage brokers. They're the only two that can actually access this report. So all the investor has to do is just simply email their mortgage broker of choice with the address of the property, and we can pull it in seconds. Now, each mortgage broker does pay for this service, so I personally am signed up. I pay for the service, but the fact is it's a great added value to my investors, and it also gives us a lot of background to help us make that right decision on a certain market as well as a specific property before you put your offer in. Know a bit more about the seller. How much debt do they have? How much cash is in the deal? If they paid $400 for the property 6 months ago and now they're trying to sell it for $500, well, what have you done in the last 6 months? Or are you just riding the wave of the market? It kind of can open up a lot of questions. But yeah, you've got to access it through your mortgage broker.
Okay, good to know. And definitely there is a question from Mark. I'm going to unmute you, Mark. Guys, if you have a question, there is a question right now. Mark, you are unmuted.
Jarek, it was just addressed. It's the same question about the Purview and how to access it. So thank you.
Oh, that was quick. So looks like not only me had a question about that, right? So.
Now, the one thing I will say, though, is I would say to you, reach out to your mortgage broker of choice right now to make sure they're actually signed up for it. I mean, they should be. It's a service, again, we have to pay for, but it's a cost of doing business. It's a huge value for investors.
So, and the brokers and mortgage brokers associated with your company, they have access to it, right? So, honestly saying, as you have exclusive rights to use it, to be used by our investors, right? So, I got the message.
Awesome. My pleasure.
Perfect. I understand that clearly, right? So, additional question. Suggestion, which additionally I would like to add, that if that's okay with your permission, is do not overanalyze. Take an action, guys. What you have provided, all the analysis tools and everything, will clarify it. I have noticed there is a lot of things which people are getting, I want to invest, like you mentioned, in Edmonton, right? Okay, and they start posting ads on Kijiji, etc. They have a clear message, like whatever the perfect client is, perfect seller, joint venture partner, etc. Right? However, by utilizing and focusing on main areas of expertise, especially, you know, like as you mentioned, rent-to-own guys, right? You can nail it. You can have it like turnkey solution. This is, guys, this is that kind of property. This is that how much money, and anything, whatever shows up in that certain area with that price range is valuable for you, then you can have a systemized logistics, right? So anybody who are rent-to-own guys, you will be watching that presentation 10 times, okay? Or even more.
It's also, it's so powerful from a marketing perspective.
Yes.
Sometimes as investors, like you mentioned, we spray and pray. You know, we spray our ads and we kind of pray that we're going to get the right tenant buyer in the right area and etc. And especially even if I go down even right to the micro level and I kind of know that, okay, this neighborhood, you know, they're working in, you know, banking and finance, or they're labor and trades. So then I could go to the unions of those labor and trades and advertise in those unions for my rent to own. So I don't have to do what every other investor does. I can really like pinpoint it down to this. And I might only get 3 or 4 inquiries, but they're 3 and 4 quality inquiries. Because anyone who's tried rent to own, you put an ad out there, you spray and pray. Well, you better pray you've got lots of time to screen all of those time wasters.
Exactly, time waster. Are you talking my language, Claire?
I think you sent me the postcard or the T-shirt. I don't know, something.
And now we can agree, like utilizing, you know, to this micro niche is the most successful, because you will be spending little time, you will have a systematic lead flow, and then you will have the highest chances of having a client as a seller, buyer, and joint venture partner, and bingo, that's the primary goal, right? Using Kijiji ads, we agree, is so, you know, generic, right? You cannot niche for that. So that information which you have provided definitely is very valuable for anybody. If anyone has a question, please raise your hand. Let me have a look. Okay, Joe. Mr. Joe.
Can you hear me?
Yes, we can hear you.
Oh, okay, so that was great, Claire. That was awesome presentation. Lots of stuff that I hadn't heard before, and, as well as lots of sites. Just a little side note before my question. Jarek had some homework for a bunch of us to do, and I'm really wishing I would have seen this before I submitted my homework, because it would have changed a lot of it. But anyway, on near the start of the presentation, on your Finance Alberta, your StatsCan sites, those bigger ones, how often are they updated? Are they frequently? I know some of them are not that frequent, right?
Yeah, so I would say that the ones like StatsCan, the national ones, they're going to be always around the census. So, you know, we had our census last year, so, you know, that, you know, probably 3 or 4 more years before that's going to get updated. But then the census stuff, you know, the StatsCan stuff, the Statistics Canada, that's going to be more, you know, for a long-term, you know, future forecasting. I mean, they're going out to 2041 based on their forecasting for demographics, migration, immigration, etc. The ones like RBC, CMHC does a quarterly update on their housing outlook, for example. And, you know, RBC is monthly. So, you know, those two tools are going to be great to use, and they're updated literally either monthly or once a quarter.
Okay, yeah, great, thanks.
You're welcome.
Joe, you are muted, and, oh, sorry. So I don't see any further questions. Claire, I'm looking forward to next presentation. Just to let you know, Joe, I knew what would be covered. And that was aligned with the homework, so don't worry about that. Just to let you know, Claire, Joe is one of the team members for Calgary for the Street Smart Real Estate Investing. So
cool, awesome.
I set you up, Joe, definitely. So, Claire, thank you very much. Looking forward for the future presentation, and I appreciate so much. I have learned, as always, something new Thank you. I appreciate that. Looking forward to have a next presentation.
Thank you so much. I really appreciate it. Thank you.